we are going to see chapter number 4, Journal of Standard 11 Commerce Account. In our last video, we have seen the transaction related to capital and drawing. And today we are going to see transaction for goods and assets. So the first three parts is already linked in the description. This is the fourth part of the same chapter. Here we are going to see transaction of goods and assets. So in this category we are going to see two types of transaction. Very first is a goods related transaction. So here goods is a real account that we already seen in the chapter number 1. So here goods is also a real account and assets are also a real account. So for both the transactions the same rule is going to be applied, that is for the real account, and that rules we know very nicely. Debit what comes in, credit what goes out. So here whatever goods is coming in the business, that we are going to debit. So whatever we are making purchase, for that purchase goods is coming in. So for that we are going to debit the purchase account. And if the goods is of inferior quality or not according to sample, and if we are going to send it back, so that the goods is going to go out of the business and purchase return will be credited. And the same way, if the goods is going out of the business for the sale, so when the customer is buying any goods from the business, that goods is also going out of the business. So for that sales account is going to be credit. And if the customer is not satisfied with the goods, if it is not according to sample or inferior quality or any defective goods, the customer is going to send that goods back. So that is going to be sales return. And as we know, due to sales return, goods is coming in the business. So for sales return also we are going to debit the sales return account. So here this thing you have to keep in mind very clearly, that purchase account is going to be debit, purchase return have credit, and sales return is debit and sales is credit. So this thing we have to keep in our mind. So the same way when asset is coming in the business, that asset account is going to be debit according to the rules of the real account. Debit what comes in. And when we are going to sell any asset, so in that situation asset account is going to be credit. And again when we are purchasing any asset, so with that asset there is a need of other expense, let's say installation of expense, any document expense, stamp duty, or any transportation of the asset account, or any repairing of that asset. So all that expense that is related to the asset is of capital nature, and that expense is going to be added in the asset. So here whatever expense that we are incurring related to asset to make the asset run in the business, that expense is going to be added in a asset account. So here whenever the asset is coming in the business, asset account is going to be debit, and whatever asset is going out of the business, for that asset account is going to be credit. So here let's see the example of that, and here is your sum. Illustration number 4. Pass the journal entry for the following transaction of Gokul Traders. So here we have to prepare the journal entry. So let's prepare journal entry very first. Journal entry in the books of Gokul Traders. date, particular, ledger folio number, debit rupees, credit rupees. Then let's prepare again. Date, particular, debit amount, credit amount. Okay, let's start the sum. So here, transaction number 1 is on 2014 April 1st. So here, 2014 April 1st. Brought cash of rupees 10,000, stock of rupees 10,000 and furniture of 5,000 and commence the business. So here we know that whatever asset is coming in the business, that we have to debit. And here the giver is who? So giver is the owner of the firm. So in that situation we are crediting capital account. So here journal entry will be cash account debit, stock account debit, furniture account debit to capital account. Cash account debit, stock account debit, furniture account debit, to capital account. So here amount is it? Cash is of 10,000, stock is of 10,000 and furniture of 5,000. So total will be 25,000. Being cash of rupees 10,000, stock of rupees 10,000 and furniture of rupees 5,000 brought to commence the business. Cash of rupees 10,000, stock of rupees 10,000 and furniture of rupees 5,000 brought to commence business. To commence the business. So this was the first journal entry. Now let's see the second one. The second is a goods purchase of rupees 5,000 from Mathura traders. So here we already discussed before that when the goods is we are purchasing goods is coming in. So we are going to debit the purchase account. And here Mathura traders is the one who has given the goods to us. So he is a giver. So credit the giver means of the personal account, debit the receiver, credit the giver. So here Mathura traders is a giver. So that account is going to be credit. So our journal entry will be purchase account debit to Mathura traders. being goods of rupees 5,000 purchased from Mathura traders. Then our next transaction is the goods sold for cash rupees 4,000. So here we are selling the goods. As we discussed before, that goods is going out of the business. So sales account is going to be credit. And here we have sold the goods on cash. That means cash is coming in the business and cash is a real account. So the rules of the real account is going to be applied, and in that situation cash account is going to be debit. So journal entry will be cash account debit to sales account. And that of 4,000. Being goods of rupees 4,000 sold on cash. Our next transaction is that is of 6 days. Goods purchased from recipients of rupees 8,000 and paid and half amount in cash. So here we have made the purchase. So purchase account is going to be debit, and again from 8,000, 4,000 is paid. So 4,000 cash will be going out of the business. So cash account debit, and 4,000 recipients will be taken later on. So we are going to credit recipients account. So our journal entry will be purchase account debit to cash account to recipients account. So here we are going to combine the journal entry. On the 6th day, purchase account debit to cash account to recipients account. Here, purchase account will be of 8,000 and cash will be 4,000 and receipts will be 4,000. Being goods of rupees 8,000 purchased and half amount paid. To Rushikesh. Our next journal entry will be goods of rupees 1,600 returned to Mathura traders. See here we have purchased from Mathura traders goods of rupees 5,000. From that we have returned the goods of 1,600. So this is a purchase return, and when we are returning the purchase return account is going to be credit and Mathura traders account is going to be debit. So here exactly reverse entry of this is going to be pass. So here Mathura traders account to debit purchase return account being goods of rupees 1600 return to Mathura traders. One thousand 1600. Okay. Next is of 900. Goods of rupees 600 given for Prime Minister Relief Fund. So here we have given the donation to Prime Minister Relief Fund. So here donation account debit, and as the goods is going out of the business, so in this situation we are going to credit the purchase account. So our journal entry will be donation account debit to purchase account on 9 date. And that is of 600. Being goods of rupees 600. Goods of rupees 600 given for Prime Minister Relief Fund. This was the journal entry. Now, let's see the next. Electric weighing machine purchase for rupees 450. So, we have discussed this thing before that. Whatever the we are bringing, that is for the measuring unit of the business. For that, we have to debit the dead stock account. So here, dead stock account debit to cash. This journal entry we are supposed to pass. Being electronic weighing machine purchase. Okay. Now, let's see the next. 100 share of Sri Barsa Limited purchase at rupees 30 and 2% brokerage is paid. Both amount is paid by check. So here we have purchased the share of Barsa Limited, and for that 100 into 30, so we have purchased the shares of 3000 rupees, and on that we have paid 2% brokerage. So 2% of 3000 will be 60 rupees. So here we are going to pass the journal entry of 3060. Okay, and here shares of Barsa Limited is going to come in the business. So that account is going to be debit and bank account is going to be credit. Shares of Sri Barsa Limited account debit to bank account, and the amount will be 3060. Being share of Sri Barsa Limited purchase. and 2% brokerage is paid. So this was the journal entry. Now next, goods of rupees 4,000 sold to Kedarnath. So here we have sold the goods, but we haven't received cash. So this is the credit transaction. So in this sales account obviously is going to be credit, and as we have given the goods to Kedarnath and Kedarnath is a person, so rules of the personal account debit the receiver. So Kedarnath is a receiver of the goods, so his account is going to be debit. So our journal entry will be Kedarnath account debit to sales account on 18. Kedarnath account debit to sales account, and amount will be 4,000. Goods of rupees 4,000 sold to Kedarnath. Now let's see the next transaction. Next is a goods of rupees 1,500 destroyed by fire. So here the goods is destroyed by fire. So here there is a loss. So loss due to fire account debit to purchase account as the goods is going out of the business. So our journal entry will be loss due to fire account debit to purchase account, and the date is a 20. And the amount is 1,500. B. Goods of rupees 1,500 destroyed by fire. So here we are still remaining with 4 transactions. You may note down this, then we are going to continue with the next transaction. Let's see the next transaction, that is of 22. Half of the goods returned back from Kedarnath. So here we can see that on 18th we have sold the goods of 4,000 to Kedarnath, and half of that is 2,000 is returned back. So here there is a sales return, and we already discussed that when there is a sales return, that time goods is coming in the business. So rules of the real account debit what comes in. So sales return account is going to be debit to Kedarnath. That is our journal entry. So on 22, sales return account debit to Kedarnath account. And here half goods means goods of 2,000 is going to be written. B. off on 25th. Goods of rupees 500 withdrawn for personal use. As we know that when there is a goods is going out of the business, asset the sales, in that situation we are crediting the purchase account. And here goods is taken by owner, and whatever owner is taking from the business, in that situation we are debiting the drawing account. So drawing account debit to purchase account, that will be our journal entry. On 25th, drawing account debit to purchase account. Purchase account, and the amount will be 500. Bin, goods of rupees 500. Withdraw for personal use. Next transaction is of 28. Furniture of rupees 3000 purchased from Bansidhar Furniture Mart. So here asset, that is furniture, is coming in the business. So furniture account debit, and Bansidhar Furniture Mart is a giver of the furniture. So Bansidhar Furniture Mart account is going to be credit. So our journal entry will be furniture account debit to Bansidhar Furniture Mart. Furniture account debit to Bansidhar Furniture Mart account, and the amount will be 3000. Bin, furniture of rupees 3000. Purchase from Bansidhar Furniture Mart. So that will be that. And the last transaction is after adding 20% profit, goods of rupees 1000 sold to Chani and carriage of rupees 50 paid on her behalf. So here goods was of rupees 1000 and 20% of that will be 200. So we have sold the goods of rupees 1200, and carriage we have paid in cash on behalf of Chandni. So Chandni is going to give us back. So Chandni account is going to be debit by 1250. To sales account it will be 1200, and to cash it will be 50. So our journal entry will be Chandni account debit to sales account to cash account. Here Chandni account is going to be debit by 1250, and sales account it will be 1200, and cash will be of 50. So here our transaction of this sum is finished. Now after finishing this, we have to make the total of the journal. So here the total is 50,960. the total. So students, you may note down this in your notebook, and in our next video we are going to see the how the goods goes out other than cells, and treatment of goods goes out other than cells in the journal. Thank you for watching this